All right. Devin, coming back to you with more, but let's talk about the market setup once again. You know, last couple of days it was looking like it's looking a little jittery and nervous. But this morning, yesterday we got the market flexing a little bit and looks like there is more coming. Anuj is here with his view. Anuj, morning.
Morning, Prashant. I'll just come to today's setup in a bit. But before that, I just want to talk about, the fact that this really has been a macro rally. And that's something that we've been talking about. It's a bit of a shift which the market has seen. One big reason has been the way Brent crude has settled below 80 despite all the bad news that's been thrown at it. And the news that we had yesterday in terms of the oil and gas deals from Qatar or the HPCL deal from Russia on cheaper crude, I mean, it's telling you why these stocks are rallying the way they are. And the government, in fact, yesterday even spoke about cutting dependence on oil imports. So all of this is adding to the macro trigger. Post-budget, spoke about the possibility of this being a budget targeted at rating agencies. So I think this is what the market's taking cognizance of. And the historical valuation matrix perhaps may no longer be relevant. I mean, I think we've all read this Kotak report this morning where they're talking about PSUs. This is the kind of disbelief which is actually fueling the rally that we are seeing in mid-caps and in PSUs. Now coming to the near-term cues, of course, today is the weekly expiry of Bank Nifty, which is an index which has been underperforming. RBI policy tomorrow and Nifty's weekly expiry, and big numbers today. From the index, you have Nestle, Tata Consumer and Power Grid. And in the F&O space, you have Apollo Tyres, Cummins India, GNFC, Lupin, Manappuram and Trent. All of them react sharply to their earnings. So in that sense, big couple of days. On the Nifty, the first support after the gap up would be the neutral zone, which is 21,929. And the bigger support would now come in at 21,805, which was the Feb 2nd swing low. My sense is that's now the new bottom for the market. In terms of resistance, the first resistance at an all-time high of 22,126, and then of course 22,225, which is based on options. On the Bank Nifty, it's very interesting. It's been such a big underperformer. In fact, this year, the Nifty is up 1% despite 5% decline in the Bank Nifty, which is the biggest component of the market. Trying to preempt any Bank Nifty rally is hurting right now. It's a range of 45,500 to 46,500. In between, of course, there can be some powerful short covering moves. But it's tough to rally till the time the two biggest stocks, HDFC Bank and ICICI Bank, they start to participate, which is something which is missing. Just one last point. The bank's weight in the index from the peak of 38% has come down to around 31, 32%. Historically, when it goes below 30% is when banks normally bottom out. So that's something that you got to keep an eye on.
Okay, very helpful there. Thanks a lot, Anuj, for joining in and explaining to us what's been leading to this, market rally.